Hi everyone, this is Finance Meets Real Estate. We have Johnny Vong here today. It's a real pleasure to have him. He's in Seattle, and he invests, I believe, in the states of Washington and Alaska. So he's the founder of Blackfish Capital. Blackfish Capital. He's a real estate developer and investor. He's going to talk today about the value of blockchain and tokenization for real estate. So as we know, in real estate development, that's particularly valuable. It's also valuable for more stabilized projects. So he's going to talk about new construction, multifamily project, tokenization of real estate equity, and the future of blockchain and real estate. So he has been investing in real estate for more than 15 years, and he previously had a management consultant career at IBM and PricewaterhouseCoopers. He got his bachelor's at Willamette University in Oregon, and a full scholarship from the Gates Foundation. He also attended Harvard on a full scholarship for his master's in public policy, concentration in public finance. So with that, I'm sure he has more interesting information to say. With that, if you guys have any questions, feel free to put them on the chat. We're doing a more conversational format, so you can also just speak up at any time. But if you're shy, you can put your questions in the chat, and I'm going to relay them over. So with that, I'm going to pass it on to Johnny.
Hey, thanks, Stefan. Wanted to maybe talk a little bit about myself and our firm and what we do, and then maybe kind of talk about tokenization in real estate, and then kind of at the latter end, kind of what I think the future and potential opportunities are in blockchain and in real estate. So about myself, thank you again for the introduction, Stefan. So my name is Johnny Vong. I'm the president of Blackfish Capital. We're a privately held real estate development firm here in the Seattle area. And we mostly focus on new construction projects from end to end. So from the acquisition of the raw land itself, through the entitlement process, through the actual development of the project, stabilization, and the disposition. And that can range from multifamily projects as well as commercial real estate projects, retail investments, and so forth. And then I guess that's a little bit myself and our firm, but then kind of the larger topic at hand is kind of this notion of like tokenization in real estate. So right now we're actively raising funds for a new construction project we're doing in the Seattle area, the Apollo apartment buildings. It's a 251 unit market rate new construction project, and we're partnered with Red Swan commercial real estate to sell digital assets, digital shares of the asset. So we're traditionally, if you were to invest in a similar project, you would in essence get like a paper share of the project. But in this case, you're actually getting a digital share, an electronic share of the project. And that unlocks a lot of different possibilities and options, which we can talk about the benefits of that. But one of them is kind of the liquidity that you could get owning a digital share of a project versus a traditional paper share. That's one of the big benefits, in my opinion, but also kind of the frictionless ability to transact that digital share.
Johnny, sorry if I may interject. So what is the name of the company that are doing the tokenization for you?
Yeah, so I'm working with Red Swan Commercial Real Estate. They're actually working with, in essence, if you think about traditional crowdsourcing websites like Realty Shares and Fundrise, they're that version, but for digital securities, digital fractionalization of projects. So just like how if you were to like invest in Realty Shares, you would own a paper share of a project. In this case of Red Swan, you would own a digital share. So we're working with them. They're actually using some partners that have been on the show, or on this webinar, such as DigiShare. So on the back end of what they do, they're using DigiShares to kind of securitize the assets on the back end.
Okay, so they're kind of more of a platform, and they're providing in a way the crowdfunding capabilities in that sense, or with
yes,
the innovation being done by DigiShares.
Yep, that's right. So Red Swan, they're kind of the crowd, the consumer-facing crowdsourcing platform, but in terms of the tech on the back end, using DigiShares to kind of do that. And we've actually already have reserved, you know, a ticker on the Ethereum network. So we have an APLO for Apollo for this project. So it's a real exciting stuff here.
Oh, that's
Johnny,
really
can I ask
great.
a quick question? Sorry, can I ask a quick question?
Sure.
What is your company's role? So if you're actually the developer, you're funding the project, and then they're going to manage the tokenization portion of the offering.
Yes,
And
that's correct.
what type of I guess what type of portion of the offering is being tokenized?
That's a great question, Laura. So our business model at Blackfish Capital, we're real estate developers, and you know that can take lots of different shapes or forms. But the way we operate is we acquire the land, we entitle the land, and we basically take it up to shovel ready, so to speak, right before we need to go construction, and then we kind of bridge the outstanding capital between a combination of debt and equity. So what we're doing is traditionally, if we weren't, you know, going this route, we would go and, you know, meet investors like yourself or, you know, other folks to come in and bring in that equity. But in this case, we're selling the equity through a platform like Red Swan. And like I said, the best way to think about Red Swan is they're just like another crowdsourcing platform, like a Realty Shares that you've probably heard of, or Fundrise. The only nuance is that you know, they're still using a company like DigiShares to actually create the digital tokens themselves. You know, in the United States, all this is regulated by the Securities Exchange Commission. So yeah, at the end of the day, whether you're a paper asset that sells shares like, you know, the Realty Shares with Fundrise, or using Red Swan, which is a digital share, we're all regulated by like Reg A or Reg D. So this particular project that we're raising funds for is a 506, you know, Reg D 506C. It could, you know, we could have went with Reg A, but there are pros and cons to both. You know, you'd have to consult with your own securities attorney about that, but that was the route that we decided to go.
Interesting. Thank you.
Who are your target investors, Johnny?
So it's a good question. So as I mentioned, since our project is a Reg D 506C, it's targeted to accredited investors, so high net worth individuals. But really, what we're focused on are people who are interested in the real estate space, but also are interested in the future of blockchain. And that's really the target market. I think folks who are interested in real estate and are interested in blockchain are really going to understand the value that you get by digitizing an asset. As I mentioned before, the two large benefits are the ability to have liquidity on an asset, which are typically illiquid assets, and then also the ability to have frictionless transactions in trading. So, for example, you know, if you were to invest in a project like this conventionally, and you own paper shares as a limited partner, and let's say after 1 year of investing in the project, life happens, right? You know, and you need your money back for one reason or another. It's pretty hard typically to sell that asset to someone else, unless it's a friend or family. And typically, you would have to sell that at a loss, at a discount. That's usually what happens in these cases. But by having a digital asset, you actually have the ability to market that to a larger audience. And you know, there are various exchanges out there. And I think some of the more famous examples in this space, you know, are using T0. But you know, if you look at the business case of elevated returns and the Vail Aspen, Colorado project, you know, the ability to market it on a larger platform will give you the ability to, you know, have that frictionless ability to have liquidity. And in those previous examples, the liquidity is actually giving you a premium. So on that business case of the Vail Aspen, Colorado project, shares were selling at a 20 to 30% premium, you know, after after being digitalized.
How is that value determined, like to say the ticker price over time?
That's a good question. And just like anything else in the market, it's, when you have a seller, you have to have a buyer. So it's just what the market deems as a premium. So, and, if the market deems that, the asset is a solid asset and there's a, value to having liquidity, the market will price it accordingly. On the same side, what we've seen historically is that the market deems paper assets to have a discount on the converse end. So, for every seller, you need to have a buyer, and it's up to the market to determine that. And what we've seen so far is that the market deems value in liquidity.
So, Johnny, so you expect, let's say, tokenization to lead to liquidity premium rather than discount, broadly speaking, or is it just, okay, it can go either way? And I mean, what is your personal, general, take on in this kind of premium argument that people have on, is like more liquidity going to lead to a, premium or discount? How is that going to pan out? I mean, it's obviously the premium in Aspen case, but and just I wanted to make sure the company is Red Swan, right? redswan.io, because we had a question on the chat.
Yeah. So that's a great question, Stefan. And I think the way I would look at it is, at the end of the day, the asset has to be performing and has to be a good asset, right? Like, you're not going to have a premium for an asset that is underperforming and is a bad asset. So, when you look at, people use this, the Dale Aspen Colorado project as a kind of like the shiny example. Well, one could have a counter argument saying, well, that's the St. Regis Hotel, like, it's, a big brand. But at the same time, if you've got a solid asset producing product, people are going to want to buy it, right? So, for our particular example, we have an institutional grade asset. It's a Class A building, 251 units, projected values over $120 million when complete. So we believe that there is going to be accredited investors who find value in that. If you've got an asset that isn't performing and there aren't people interested in buying it, you're not going to have that premium. So it's kind of balancing both of those things.
Hey, Johnny, thank you. This is a fascinating topic. I just want to dig a bit deeper. Asset digitization isn't new. I think Brock Pierce digitized and sold his tokens, his blockchain capital, I don't know, 4 or 5 years ago. And with the view, exactly as you said, that that asset, you take a liquid venture capital fund and make it liquid via token. However, theory is different than practice, as you know. And there's been many tries over the past years in many countries to digitize real estate as well. Frankly, I have not followed it recently, so I love your update. When you're chasing non-crypto people to buy a token, that is a really big challenge, right? Because accredited investors that are not yet in crypto find it quite difficult to get into it. And then if you talk to crypto people to buy real estate, they think it's boring because the returns are not very good. So how do you resolve that issue? One. Second, what platform or exchanges could actually do give you that sufficient demand to create that liquidity that you talk about? Thank you.
And those are some great questions. I guess I'll try to tackle. I kind of identified 3 questions. I think the first was about how do you convince real estate investors to be open to the blockchain. The second being, how do you convince blockchain people invest in real estate? And the third being, how do you kind of get eyes on this? So I think the first question, how do you get real estate investors interested in kind of this oddball idea of, hey, instead of a paper share of a project, let's go with the digital. And, I've been having some challenges, to be frank with you, because real estate is one of the oldest industries in this country. And if you look at the real estate industry, even in the way we do things, nothing's really changed in 100 years. Like, if you look at how a building is built, people still show up on a job site with a hammer and a pile of wood and they start going to town. Nothing's changed. And it's one of the industries that's, I think, hard to kind of make change to because of the way it's structured. So I think what you need to try to sell investors on, and maybe it's just the target, right? So instead of targeting, I would say, more established investors, it's those investors who are looking to get into the industry, but also find value in the liquidity and potentially the liquidity premium, whether or not that premium is there. But it's just the ability to go in and out of an asset. So the way I look at it is we're kind of at this digital age right now for all assets, not just real estate. So if you kind of look at the larger movement within cryptocurrency, people in crypto, it's a 24-hour day, 7-day a week industry. You can buy or sell whatever asset, whether it's a Bitcoin, Ethereum, whatever token you want. That's 24 hours a day, 7 days a week. And those transactions settle near instantaneously. And if you look at the larger retail movement we see in assets such as the stock market, we've kind of seen this like Robin Hoodization, so to speak, of trading, is that there's a new expectation that things have to move frictionlessly, and it's 24/7. I think that's coming. Whether that's going to happen over the next 2 to 3 years, or if it's the next 5 to 10 years, consumer demands are changing. And I think eventually real estate will catch up to it. And it's just targeting those consumers to that point. So your second question is, how do you kind of get to people who are heavy in blockchain and crypto into real estate? That's a really good question. I mean, I'm not sure who on this call is a big crypto or investor, but there's a large school of thought in blockchain and crypto, or crypto really. It's there's a phrase called like you're like a hodler, right? You hold on for dear life, regardless of the price, if it's up or down, you're gonna hold this asset to the very end, right? And I think getting people to sell their Bitcoin or their Dogecoin or whatever coin they have and to invest in real estate, it's a tricky proposition because they want to see the upside, right? So one thing that I'm seeing is that there's capability, a lot of decentralized financial products out there where you could leverage your crypto and get a loan. And some of these loans, depending on the platform, you can get almost a 0 to 2% loan on some of your crypto and diversify your income into something like real estate. And obviously, depending on the real estate investment, you can get advantages, such as depreciation. You can even potentially, buy a fractional asset and do a 1031 exchange that way as well. So it's just, there are challenges trying to convince both types of investors, kind of crossing the bridge, so to speak. But we're going to eventually get there. I think to your third question, how do you get more eyes on something? And, we're pretty new in this space, right? There's, as I mentioned, I'm working with Red Swan, but there are a bunch of crowdsourcing platforms out there, as well as individual investors who are trying to create these marketplaces, so to speak. So just like anything else, the larger the marketplace, the greater the number of eyes and the greater demand you're going to see in a product. And as I mentioned, T0 is one of the bigger ones out there right now. They, have some larger assets, real estate projects. And, it's just trying to figure out the ones where you're going to find your potential investors, your potential buyers.
And Johnny, so just as another question we had on the chat. So you mentioned T0 as the platform for selling the tokens, but who would you say is the leader in real estate tokenization? And then the question continued with, okay, what had been an impediment still, in which country will open first? Will Binance be a key player to tokenize real estate, as they already are doing the cryptos or equity side? I mean, if I may interject, and let me know what you think. I would think it's even hard to say a leader because it's an incredibly beginning stage, right? There's literally a handful of companies doing that, and I think it's quite a early stage development right now. But who do you think would be the leader, or where would the leader come from? Do you think it would come? I guess the question with Binance is kind of a good one, since currently crypto exchanges, they haven't been invested in any form of real estate, as far as you know. Do you think they might in the future?
That's a good question. I mean, if you look at the industry as a whole, there's a lot of people that use this. I'm not sure if it's fun or if the listeners are baseball fans, but if you think about like the baseball analogy, we're not even in the first inning in this industry. We're probably like in spring training. Like that's how early we are in this industry. So I know, for example, like I said, I'm working with Red Swan, and they're using DigiShares to actually tokenize the securities themselves. But there are lots of different competitors out there, and everyone's got a pro and con of like why you should use one versus another. I guess in terms of exchanges, did you mention Binance? Is that what you said, Stefan? So
Yeah. That's what the question mentions. I mean, yeah, Binance, they have increased their market share. I mean, I think crypto exchanges market shares fluctuate quite a bit, but as far as who is the leader there, but
yeah. So I mean that could be potentially the next big wave is listing something on a big exchange like a Binance or Coinbase, but there's probably going to have to be some type of like minimum, right? So a lot of these exchanges, there has to be some type of market capitalization that makes it worth to them. So I would say trying to list a single family house that's tokenized is probably going to be pretty hard on Binance or Coinbase. But if you have like a high-rise tower that's worth $1 billion, yeah, that might be something that'd be more realistic. I think what probably makes the most sense in my mind, and where I see the industry going, is I would call it like a blockchain REIT, right? So we have REITs that normally raise money and they buy properties, but imagine a REIT that has a coin, or in essence, and you can buy that on like a Binance or Coinbase or whatever exchange that's out there. And I think that's really the next evolution, is moving that into that space.
Johnny,
Good.
quick question on sales. Who's handling sales? What does that look like? Are they licensed? Are they need a real estate license? They need a securities license? Who's handling that transaction?
It's a good question. So, as I mentioned, for our particular project, we're, Reg D 506C. So, we only market to accredited investors. And, as a part of being a regulated security, you need to have a broker's license to really, kind of handle that. And as I mentioned, we're working with Red Swan, and, they're, have a broker dealer license. You could, like, I'm not a securities attorney, but, there, a lot of different ways you can tokenize something and potentially go to a friends and family route, but then that doesn't give you the ability to, market down the line if you wanted to kind of, trade these fractional ownerships in an open market. So it'd be something to kind of think about when you kind of evaluate those different options.
And just one other question, I don't want to monopolize your time, but how are you seeing your like secondary market? If you're offering the tokens, and is there expectation that they're going to hold, probably I would suspect at least a year, but if it's beyond that, can they, do you have a right to purchase back, or how does that work after the initial offering?
Every offering is going to be different. So the way you structure it is kind of up to you. If you as the general partner want to have the right to first refusal on the shares, that's kind of the way you want to set it up. But all of this is there is a cooling off period. If you're going to create a security and sell it, whether it's a paper or digital asset, and I believe that the cooling off period is 1 year. So, but you'd have to confirm with a securities attorney.
Another
How
question.
big is Red Swan? Sorry. In terms of volume, in terms of users, in terms of this type of asset tokenization they've done?
Yeah, I mean, you can go on their website to kind of get all their details, but they've have over 30,000 accredited investors, and I think in addition to my project, there's a few dozen other projects. They're evaluation of $300 to $400 million roughly. So, but yeah, you get more details on their site.
This is awesome. I have a quick question, or two quick questions. Are dividend, I guess maybe three, are dividends paid out in cryptocurrency? is number one. And then number two, how often is the property value going to be reassessed from a like evaluator? And then I guess just those two for now. Stick with those two.
Yeah, I guess your first question, it's kind of up to you. Like if you want to pay someone in dollars or whatever local currency you're in, or crypto. But I think just out of like risk management, if you're, the general partner like myself, you don't want to have the fluctuation in the exchange. So if I had a bunch of investors that wanted to be paid in crypto, I'd probably pay them in like USDC or USD, right? That's what I would do. I guess in terms of your second question, can you repeat that again?
Yes, as far as physical value, how often is property value going to be reassessed?
That's a good question. I mean, typically properties, get valued whenever there's, some type of event, right? So, usually want to value a property when it's stabilized, you'll get a value then, or, if you're looking to get a refinance, and, anything in between, you would have to hire an appraisal. So, it'd be kind of up to the partnership team if there's any value of getting that assessed, annually. I think anything more than annually wouldn't make any sense. But if, for example, you were trying to, increase the valuation of the token, right? You could get it appraised every year. And if, if your rents are up and your expenses are down and, interest rates are low, that would kind of lead to a higher valuation on a property. So that would make sense, I think, maybe on on an annual basis to examine that if it, kind of penciled out.
That's awesome.
Hey, Johnny.
Kind of the perceived value is just kind of what the token would trade at.
Yeah. And that can kind of, as a follow-up to some of the conversation around, liquidity premium and just value itself. But, I think one of the things that you don't see in digital, what you don't see in paper shares of projects like this is, kind of that forward thinking, right? So if you are on a platform and you're trading, your shares of your project, well, you're going to be incentivized to show value, right? And if your asset is performing well and you have an annual appraisal that's showing, hey, year over year, these tokens are worth more because the property is worth more, and you've got a story behind it, that's what you can kind of sell to potential buyers of those tokens.
Hey, Johnny, you touched down on the frictionless element of tokenization. So I'm wondering, like on the front end, whether syndicating or just taking money in from investors, there's just a hassle sometimes to get funds wired, all those sorts of things. Have you found anything in this process in terms of working with Red Swan or just the entire tokenization process that makes the entry or getting funds in from your investors more frictionless, less hassle? You found any advantages there?
That's a great question. In terms of like the front end of like capital raising, there isn't really much of a difference from like a traditional capital raise, right? You still have to talk to investors, and you need to kind of, share all the legal documents you need to share. And if there are questions, and, what ones of funds get wired. And in this particular case, in our capital raise, we're actually accepting, digital currencies, but they eventually get converted to, US dollars. So from the front end, there isn't really much. I do believe, I think if we've got some time, I think there is an opportunity to kind of have, kind of the frictionless transactions kind of in the middle of the property management, as well as kind of the disposition. And that's where I kind of see where blockchain can kind of provide value. So, right now, one of the things I think there's a ripe opportunity for is transmitting information to investors. So, there's a lot of technology out there around smart contracts and just sending, not just transactions, but just information. So a lot of large projects use software such as like Yardi, for example, for the property management. But there could be a situation set up where you have your asset connected to a property management system, and that data just gets automatically put on the blockchain, and then it's there permanently and verified for all investors, right? So not just you, but for potential buyers of the tokens themselves. So that's kind of, I think, an opportunity to kind of leverage blockchain and the asset management component of it. And I think that provides value on the back end. So imagine if, you're managing a property on the blockchain and everything that you have in your property management software, but also your accounting software gets recorded. Well, then when, for example, if Stefan decides, hey, I'm on T0 and I'm interested in buying some of these shares, how do I do my due diligence? Well, it's on the blockchain. And then he's able to verify all that stuff himself. And he's able to kind of see, yeah, this is the rent roll, this is the title report, this is everything. And then, when he does his due diligence, because that information is there and he has a level of confidence that it's accurate, he can then and there, purchase the shares, and that gets transferred somewhat instantaneously.
Okay, thanks. That's actually a good insight. I hadn't thought about that.
So on which, if I may interject, on which blockchain is the tokenization that you guys are doing, implemented on? Is it Algorand or something else?
So the tokens are on the Ethereum network.
Okay.
Right now. And that's just kind of on the tokenization of the asset itself. What I'm kind of talking about is actually kind of just my general thoughts on the industry, like that stuff. I think some people are working on it, but I think the larger movement of real estate and blockchain, it's coming. And I think that's where the real value is, in my mind, in addition to the stuff we talked about digitalizing the asset, is but just putting valuable information that the consumer or investors would find valuable, but have, that assurance that it's verifiable, that it's accurate, and that it's instantaneous.
Yeah, that makes sense. And but let's say from a markets perspective, let's say I come from a finance background myself. So if you have a, let's say currently on T0 having the biggest volume of tokens placed, that is pretty minute compared to what we would expect it would be in the future, right? But are you seeing from a markets perspective sort of trading of sort where people want to, for example, if we spoke of liquidity premium, but in the event there happens to be a discount for the tokens, have you seen, actually on T0 this scenario where people would want to kind of trade into projects on the expectation that the actual appraiser would come in higher and some price convergence? Because I feel like it's going to be like this kind of arbitrage trading, right? Like trying to eliminate the price discrepancy between the real code, well, not tokenized appraisal that an appraiser would physically do on that asset versus the token's value. So I wonder how much of that exists on T0, because one would expect pretty high spreads, right? Because it's not liquid yet.
Yeah, and I think it just really depends on, like I said, at the end of the day, it's all about the underlying value of the asset, right? So, whether you're like a big brand like a St. Regis Hotel, or you're like a high-rise tower in downtown New York, you're gonna have that premium because of the brand, right? I think it just depends on the asset. I think one thing to kind of think about as well is one of the additional benefits of owning a fractional ownership is the ability to get leverage on it, right? So you actually own the share itself. I think we'll see DeFi products out there that will allow you to kind of lever up, so you don't actually have to sell that share, and that if you wanted to keep it but still take a loan against it, that's going to be possible.
Yeah, that's I've heard of that. That's opportunity. That's a great opportunity. You don't need to get a mortgage on the whole asset. You have also lending on all the fractional components as well. So that is great value. And from a marketing perspective, I mean, I'm sure you touched on this partially. We have a question on the chat. So is there an advantage to tokenizing real estate from the perspective of reaching your market or establishing a marketplace? Or is that part still conventional marketing? Is there some sort of public exchange? So you did mention T0 as a public exchange for that.
Yeah, I think in terms of marketing, you're going to have more of a challenge. I think one of the previous questions talked about, trying to reach a target audience. So it's going to be a smaller target that you would have to, raise capital from. But I think if you can find the right investors who are in alignment, they're going to really see the value in it. I think as a developer or operator or owner, I think one thing to also consider is you could theoretically tap debt equity, right, or untouched equity in a project. So, Stefan, if you owned a project, right, and if you try to get debt on it, you can typically, between senior debt and like a line of credit, you can, lever up to like 80%, in some cases, maybe 75% in commercial projects. So, there's kind of that untapped equity between that, let's say like 75% to like 99 to even 100%. And you could, as an owner, developer, operator, sell your shares of it, but still maintain control as an operator. So I think that's something that, as a developer myself, I also find pretty fascinating, is the ability to kind of, sell those shares but maintain, control of the asset.
Johnny, are you working off of Ethereum because Red Swan is working off of Ethereum, or is that something you had a choice in?
That's something that, they had a relationship with Ethereum. I'm not going to pretend to be an expert in crypto, and there's lots of different, ways to tokenize a project. You can go on Ethereum. I know some people are working off of Raven Coin, and theoretically work off of any network, and there are pros and cons to all of that.
Well, there has been also, there has been quite some funding of startups in fractionalized real estate that is not digitized, that is not cryptocurrencies, but it's merely, it's not tokenization, but it's merely fractionalized. So why do you think that's happening in parallel? Is that, given the additional benefits of, the cryptocurrencies in terms of like transfers of the assets, etc. I'm talking about companies like RioT. I don't recollect like all the names. It's been like a few like series funding rounds on fractionalized real estate startups, and it's been trendy even without tokenization, because we have it's essentially like placing the fractionalized part has been there for a really long time. It's just shares in an SPV, right? Mm-hmm. So a special purpose vehicle. It's blockchain that gives further benefits, like from some of the kinds that you discussed, that are beyond merely fractionalizing. And I've always wondered, like, why why it seems that a lot of the funding is going in the pure fractionalized space rather than tokenization. From the VC industry, from venture capital industry, I wonder if you would know or have some insight into that.
Yeah, and I'm not gonna, every one of those crowdsourcing sites have different business models, but just from what I can gather from my look in that industry is that, I think there's a large movement to try to target, I would say, unaccredited investors. So, there's if you think about it just from a pure like market capture audience perspective, there are less people who, there are more people in that, that category, right? The Reg A, like unaccredited investors. So they're trying to get people to, invest $1, $10, right? But if you can get, millions and tens of millions of people to do that, you could potentially raise more money. I think some are more successful than others. So it just kind of depends on, what your strategy is. But a lot of the fractionalization that I've seen is targeted to those types of investors to have really low minimums. At the end of the day, real estate is a very, I think, a sexy type of industry to get in. Everyone knows somebody that works in real estate, and everyone knows someone who has a success story of being successful in real estate. You see all those ads on TV about, no money down and get rich quick schemes and all that other stuff. But I think it's just another way to kind of capture that momentum and target a larger audience.
And let's say for you, like working with Red Swan, so what were, what are the requirements to getting listed on if let's say for people who are sponsors of projects here, let's say syndicators, etc. Is that something they can do, or it's more okay? You have it's like 120 million development project. You know, it's more, it's class A, etc. Do they have like specific requirements on the project side so that one can list their project with their project there?
That's a good question. So I'm not going to be able to speak for them. I know they've got their own internal requirements. So I guess for those folks who are interested in working with Red Swan, they reach out to them directly. And if anyone wants to reach out to me to do an introduction, I'm also happy to do so. And they're also competing, or not competing, but comparable websites like them who will help you through that process. And for those investors or developers or operators who want to do it themselves, you don't necessarily need a Red Swan, right? If you've got a large pool of syndicated investors that you work with all the time, you can kind of DIY and find a company to digitalize the asset, and you can manage that yourself on your end if you've got the investor base to work with.
Right. So another question we have is, so will owners of individual tokens have voting rights for the management of the asset, or are their governance tokens separate?
That's going to depend asset by asset, right? So, as the GP, you kind of set the operating agreement and how your shares are divvied up and what rights you have. So for my particular example, there are voting rights, and depending on the type of decisions, capital calls or refinances, it requires a certain percentage. So it really is going to be asset by asset specific.
And with regards to 1031 exchanges, so is that something that you're seeing happening? Because now if we take the current syndications is currently done, right? They need to be a TAC, tenants in common structure, for it to allow to be able to kind of 1031 exchange into a syndication. And in the more usual scenario of limited partners, general partners, then that's not doable. It doesn't meet like whichever the like kind requirements, etc. So, but you did mention, is fractionalized real estate gonna fit into that sort of TAC comparable, tenants in common comparable framework, or what are your thoughts on that?
Yeah, I mean, so I'm not a 1031 attorney or accountant, so but I think there are opportunities to do that. It just depends on how the entity is structured, right? And you don't necessarily have to have a tenants in common to 1031, but I would talk to a 1031 exchange expert on that. But yeah, there are opportunities to have it set up where you could exchange in and out. So.
Hey, Johnny, you mentioned earlier, if I understood you right, that if your investors want to take distributions in a different currency than US dollars or crypto, that it had some impacts for you. Can you elaborate on that? Because to my understanding, one of the benefits, if I'm an investor, is to be able to take distributions in wherever I happen to be, as opposed to US dollars, Canadian dollars, whatever, particularly if I'm concerned about currency issues, etc. So what kinds of things do we need to consider in terms of additional costs or hassle factor?
I think that's a good question. So I think when you're working with your investors, you're trying to figure out the currency for your distributions. Just from my perspective, right now in the crypto market, there's a fair amount of like volatility in pricing. So if you were to if you and your investors came to an agreement, say, hey, I want to be paid in Bitcoin, for example, right? Well, the value of Bitcoin changes like every second. So if you're doing like monthly distributions, and then on the end of the month, it was 1 Bitcoin for distribution, but the next day it's like half a Bitcoin. I think there's a fair amount of risk as a general partner operator in doing that. But at the same time, if your investors are aligned with that and they're aware of all those risks and currencies, that's something you can explore. I think, in my opinion, if you want to pay in crypto, the best thing to do would just be to pay them in USDC or UST, and then have them do a conversion themselves in their wallet. So, but like I said, if you and your investors are in alignment of how you want to do it and they understand all the risk, I think that's perfectly fine. But I think at this point, given the volatility, it would be kind of hard, in my opinion, to convince people to be all on board on that.
When people are in your investor portal and they're choosing their distribution, denomination, do they have the choice of taking distributions, in USD or some other foreign currency, or are they locked into one option or another? Like how would they flip between currencies if they wanted to do that?
Well, just be kind of up to them, right? So depending on how you want to pay them, if you want to pay them in their digital wallet or pay them in their bank account, and then be up to them to kind of do the conversion.
Okay.
Johnny, can you walk me through, just like, I'm an accredited investor, like just what the steps are, who's holding the asset, that kind of thing? Like what am I doing? I have to do KYC, and that's something that Red Swan's going to do. I give you my money, and then what happens?
So I guess can you elaborate? I'm not quite sure what the question is.
I mean, just like can you take me through the steps of actually the purchase of the token, and who has custody of it, or am I holding that somewhere? Like how is it issued?
Yeah, so in this particular case for my project, like I said, we're using like a crowdsourcing entity like Red Swan to kind of facilitate that. But at the end of the day, you're holding the token, right? So you work with them, you pay them, whether you pay them in dollars or crypto, that gets all converted into dollars anyways. It's holding a custodian account, just like a normal crowdsourcing platform, and then that gets paid out to the investment, but then you yourself as an investor get the digital token.
Got it.
And it's all regulated by the SEC. There's actually like paperwork that comes along with it. I mean, and you get the same tax forms as well. So it's, like I said, it's very similar to what you would do normally in a syndication with like limited partner shares, but there's just the ability to have that digital share itself.
Yeah, and on the topic of taxes, I guess that would come out of your share, right? If you're going to have obligations to property taxes and things like that also.
Yeah, and you mentioned the KYC. So as a part of the onboarding of any accredited investor, you have to get their social security number or their EIN, whatever entity is holding the asset. So that's all reported and all that other fun stuff.
Johnny, quick question. Whose role do you actually foresee it becoming when it comes, in terms to basically mitigating LTV and a developer's ability to access, let's say, and a developer's ability to access over like 80 LTV? Obviously, more liquidity is more risk, which can result in past patterns. So just, to have an idea of, let's say an investor is going to basically buy these tokens at, let's say, keeps cutting out, at 50 LTV on a free and clear asset. And then the developer goes and wants to raise another 50 LTV. Now your asset's all of a sudden more risky. Who's mitigating that in the process?
I mean, that's a very good question. So I think, I think it goes back to what the operating terms of the asset are, right? But I think if you think about the particular example that you have, it goes back to what the shares are. So when you regardless if it's a digital asset or paper asset of a real estate project, there's ownership of the project, right? So yeah, so if you as the developer own 50% of the asset, you own 50% of the asset. And the question is the unlocked equity that I was talking about earlier. Well, you own 50% of the unlocked equity. You're not owning all the unlocked equity. And it kind of depends on what other parameters you have in the operating agreement to kind of talk about some of that risk mitigation. But to your point, just as the operator, you just can't have a capital event like a refinance without following the waterfall distribution or whatever mechanisms you have in place.
Got it. Thanks.
So would you like to talk more about the projects you guys are doing currently, and let's say how did you get into real estate development out of management consulting before? Like, what was your path as an investor?
That's a good question. I kind of had like a non-traditional route to real estate investing. So as I mentioned, Stefan, I have a career in like management consulting, but I've always been a real estate investor. So I've been investing in real estate for over 15 years, mostly in single family homes, as well as small multifamily projects. Then about like 7 years ago, I was kind of tired of managing my portfolio projects and wanted to get into something bigger, right? And so instead of having like 7 little headaches, I just wanted one headache, so to speak. So, and what I found was that I didn't like any of the projects that were listed for sale, and and I kind of took a leap of faith and said, I think I could build these better myself. So I kind of started with a small new construction project, with 4 units, and then eventually went to 24 units and kind of built my way up to hundreds of units. So I think it's kind of like a leap of faith, but at the same time, I've always been in real estate, so I kind of knew the fundamentals and the economics behind how things work. And I think having that that background in finance and consulting helps, because I always ask a lot of questions. I never pretend to know everything, and I always like learning new things. So this was like a new industry to me, but in some ways it's not that much different from technology or other industries that you have a kind of like a life cycle, so to speak. When you build a building, you've got the early stages of like design, you have construction, and you close the thing out, and then you kind of maintain it. So I think a lot of similarities of construction, real estate, and other industries. I think that I've been able to apply some of the best practices into.
How did you learn construction? Let's say, like, are there any books you can recommend, for?
I think the best thing is, it's kind of like that phrase, like you just got to jump in the deep end. So I think the best experience is just doing it, and obviously having mentors around you and hiring a good team. But I think reading a book is one thing. It's like, okay, having the project and seeing how it's done from the ground up is a whole nother level. So, start small and, go through a couple iterations of it, and you're probably going to make some mistakes, but that's fine. But you'll learn a whole lot more in the process.
And from a purely, like because you're doing a 250 units. So let's say in a multifamily, stabilized multifamily investment or value add, let's say, like they look for like certain IRRs, etc. Like you're projecting on a given exit cap rate, maybe, and rent growth assumptions and things like that. So what are the metrics that drive you in your project selection? Like, are you trying to build to a given cap rate, and then once it's ready, kind of sell it at another cap rate? Like, what is your thought process numerically as an investor?
I mean, that's a good question. So I think every project type is going to have a different metric that I look at. And, for new construction multifamily in an expensive market like Seattle, I'm usually looking at, obtaining, mid-20s to high 20s IRR, and at least, 125 to 150 basis point spread. So those are kind of the high level metrics that I look at. Obviously, if something's a couple points lower than that, still keep my eyes open to it, but also time horizon too. So, if something is like a 3-year project versus a 5-year project, I'm going to want a larger rate of return for the longer term time horizon project.
Yeah, that makes sense. If do you guys have further questions?
Johnny, you said you're in pre-construction on this project?
We are actually in permitting. We're looking to put a shovel in the ground Q1 of 2022. So we have entitlements in hand and a 90% construction dock set. So it's just kind of finalizing permitting right now. So
those that are going to invest now are really, I mean, when do you start the process of, I mean, obviously you can't provide income until you have the property occupied. So
Yeah.
how is that working?
So, I mean, usually how new construction projects work is that you accrue preferred equity as soon as your dollar is invested, right? So, and that's why for new construction projects, you'll see higher pref rates, you'll see higher IRRs, right? So, you typically for value add projects, those IRRs are probably in the mid-teens, right? So, for new construction, you would want to at least see the mid-20s to high 20s IRR, and that's why you're doing the project is for the upside. You're not doing it for the cash flow. You're doing it for the equity multiplier in that 3 to 5 year time horizon.
So someone could ride that on up to delivery and then sell their token, or if they wanted to do that.
Yep, that's right.
Okay, got it. So interesting. I just love what is happening in this space. It's incredible.
When the asset is sold, what happens to your token? Is it then liquidated?
Yeah, I mean, when the asset is sold, then all the token holders get paid out, and then in essence, the token is null at that point. But I think one of the things to consider is if you were going to go to the trouble of all this, maybe you never sell the asset.
That's interesting.
Right. Then as the GP operator, you're gonna, still get the asset management fee, and you'll still, not control, but you'll still oversee the project. But yeah, the asset is just kind of in perpetuity. So
Yeah, that's our approach for a couple of reasons. One of the ones you mentioned, but also I think it allows you as a developer, if you're really community minded and you want to do something that has a lasting impact in a particular area, it just allows you to take a longer term view. So you're holding the asset for a long time, you're thinking differently about resident experience and that kind of thing. So I think there's some advantages to that, both financially as well as just creating a greater impact on communities.
yeah, I think that's a good point. And I mean, what I do, these new construction projects, they're kind of a pain in the ass, to be honest with you. It's probably, it takes years to design these things. It takes years to build them. And by the time you're all done, you really don't want to sell them, because I'm not saying they're like your children, but it's a lot of labor and love that kind of gets into building the thing.
And you mentioned actually the possibility, or kind of like the option for, let's say, the sponsor of a project. He can, in theory, due to this liquidity, he could exit. He could sell his own shares, right? So let's say you you organize a syndication of sort. You have LPs. You're invested to a certain portion of the equity, and you could kind of sell your equity. Now, does that provide any? Is that okay? We think like with investors generally, because usually I know like syndicators kind of, they like to, or like investors, LPs, they like to see from syndicators that okay, they're invested in that project, they take part, but now okay, they can sort of simulate it and okay, take a position and sell it out right away.
I guess it kind of depends. I think at the end of the day, if you are managing the asset well, I don't think anyone's really gonna care. I guess the big thing to consider is, if you think about like, big projects like this that are, they're really like standalone companies, right? So like, as I mentioned, I think a few of the questions I've answered, kind of goes back to the operating agreement that you have and the LLC agreements they have in place about what happens in different scenarios and different events. At the same time, if you sell so many of your shares, what if someone wants to like buy a bunch of shares and they take control of the asset, right? So, there's like pros and cons to all of that. And it's not that much different from like a publicly traded company, right? Like someone can, be one of those, vocal, investors that, take over and get a chair on the board. So very similar in that regard as well. So, before doing something like that, you kind of have to kind of consider, how everything's structured and what makes sense to you.
Where do you see the impact of recapitalization and tokenization of, let's say, value add to then stabilized assets or developed, now developed assets?
It's kind of hard to understand your question. Do you mind if you repeat that again?
Yes. Yeah. Where do you see the opportunities in recapitalization of assets? So taking, like, let's say a value add with typical, paper investors to then selling the equity on a tokenization platform, or in your case where it's land, you develop the land and then recap it out through a token once it's stabilized.
Where do I see the opportunity?
Yeah. Where do you see the opportunities, now and in the future?
I honestly think if you kind of think about where the industry is heading, I think there's going to be massive opportunities in the DeFi space in real estate, right? I think we're going to see more. If you kind of look at where cryptocurrency is now and some of the DeFi products that are available, and how things are kind of things are lending upon each other with a cross collateralization. I think that's really the next big move, and I think where you'll see the friction right now is because the mortgage and debt industry is so mature in this country. That's why we see interest rates being so low, right? I think if you were to try to get an interest rate on a multifamily project, depending where you are, you're probably looking around 3%, right? And I think that's because these things are cross collateralized, securitized, and sold on the bond market like 1,000 different ways. So where I see is like where the DeFi space is going to mature, and that becomes the next evolution where you get all your debt, not just your equity that we've been talking about, but also the debt component of it in the DeFi space. And I think that's just going to be a function of the industry getting bigger, more money getting into it. And I don't think this is going to be something that happens in 2 to 5 years, but I would say 5 to 10 years, it's definitely a possibility. I know they're looking into. I know there's some providers out there really actively looking at providing mortgages in the DeFi space for personal residences. So I think over time we're going to see that lending really grow.
Yep. So essentially revolutionizing the mortgage and kind of lending industry. To, in a way, having tokenization, blockchain, etc. So another question: how can there be more money in DeFi? I'm not sure if Alex, if you do you want to explain a little bit more?
Yeah. So, hi, I was just throwing just a blanket or general statement as a question mark. How can there be more money in DeFi, as it seems like there's too much money in DeFi? It almost feels like it's a bubble in terms of how much money is being thrown at the few projects out there that are actually innovating and I suppose gaining market share.
I think if you look at in terms of the companies, maybe, but in terms of the actual assets themselves, if you compare DeFi and the loans that are being out there compared to the loans and the bonds that, for example, the Treasury and the Fed is purchasing, it's a fraction of what it is.
No, you're right. I've just been seeing. I think I've seen more than 20 different grants and foundations being offered from almost every single enterprise DeFi company out there, where they will give you money, or if you have a well-defined product or a well-defined problem and a solution that you're developing, there's plenty of money out there to go and develop these different solutions. When speaking to money for specific use cases, maybe that's a different story. But for developing product or solutions, I think there's too much at this point.
Yeah, I think to your point, I think this is kind of like people are trying to capitalize on the next .com boom or bust, however you want to look at it. But to my point is I think I'm not sure what companies are going to be successful or unsuccessful, but I do think to your point that it's going to be the use cases, like the actual assets and the the properties are going to be collateralized against them. I think that's where it's going to be. I don't know which companies are going to be the winners or the losers in that space, but I think that's kind of the maturation of the industry.
Yeah, I wanted to quickly throw out that there's a new work group being stood up on Hyperledger. It's seated under capital markets, and it's going to be specific to mortgage. If you guys, I'm sure I could find a link and share it with you guys, but it's probably a good place to be. It's just starting now. I think October 1st is going to be their first meeting.
Yeah, thank you for that. And yes, Johnny, that's been really great. Thank you for being here today and taking the time to speak to us and, you know, taking all questions, etc. Is there something that we didn't cover today that you wanted to cover?
No, I think this was mostly it. I mean, thanks again for having me on your webinar. A smart group of people here with a lot of good questions. So it's been my pleasure.
That's great. So what's the best way for people to reach to you?
They can, you know, find me on my company's website, blackfishcapital.us. I can put it in the chat notes, but I'm Johnny at blackfishcapital.us.
That's great.
I will definitely be following what you guys are doing. I mean, I wish you all the best.
Oh, thanks.
Super exciting, yeah.
Good conversation, guys. Thanks for hosting, Stefan. Johnny, appreciate the insights.
Thanks everyone for your time, and you have a good day.
Thank you.
Thank you.